3 times on the same trade, I'll walk away. But sometimes you do have to literally, especially in high leverage markets, you do have to try your entries a couple times before you get it right. You try shorting something and say, oh, okay, I got stopped out, or oh, it's coming back around. Let me take a little bit of profit. It's going to go lower. It's going to go higher, and then you try the trade again. Okay, but using a stop loss is crucial, guys. Like, it's so crucial, because you don't want to be holding on to a losing trade for too long, and the stop loss is there to stop you from loss. I know one of you guys was asking me about the stop losses not triggering and not working. I haven't had that issue so much. On Poloniex, if you want to dump your coins, you basically have to set your trigger and your sell at the same price. And same thing, if you're trading on BitMEX, first of all, if you're trading on BitMEX on high leverage, set your stop to not be the market price, to be the index price. You have the choice on there to choose the price point that you want to reflect where you're putting your stop loss. Always choose the mark price or the index price, because the actual market price, for instance, the market price for Bitcoin on this move right here on BitMEX might have very well gone down to 1040, but the index stayed at 1050. So you don't want to get, stopped out or washed out on just a spike. You want to, follow the actual index price of what you're trading. And that's really cool, especially on BitMEX. They give you that option, so take it. Don't go with the actual market price all the time. So we wanted to understand how other people are going to lose money in a lot of the trades, and this is a really good example. A lot of people lost money on this. Okay, I even got stopped out with a slight loss right here. Okay, but why? Because obviously it looks like it needed to clarify the support here of this ascending triangle breakout. It has to now move beyond that. Okay, so if it holds this line, then it's a good sign. It's a good sign that we moved past that 1050 mark and that we're probably going to continue up. So I wouldn't put an Elliott on this just yet as far as any kind of structure coming out of this. This is still kind of a questionable bounce to me. We got a nice impulse down, a retracement back up, but we got to clarify support here. We really do have to clarify support, because if this thing breaks and this thing breaks, then we're going to flush. Okay, this is not out of the woods, so to say, this yet. For not turning bearish on us. And the market has to do that. It has to clarify the support. It was nice here. It found that bottom, rallied up, broke 1,000. Coiled up here, broke that 1050, but now we're coming back to test that 1050. All right. So now would be the time to go long at this line. Not when it broke, not up here, but if we're going to hold this line, now would be the time to take that. If you feel like Bitcoin is mostly pointing in the direction of going up on higher time frames, and we're seeing this, this flush out right here of all these people here, then this would be a safer trade to take than to buy the break or to, buy anywhere in here. Now that we're clarifying support here, this would be more of a safer spot to get in on a trade like that. So we just really want to identify a lot of these places where other people are losing money to try to get in, basically to try to get in. Okay, let's check out a couple other markets here. Let's look at GNT, because this thing is painting beautiful Elliott waves. I missed this one. It's hard to keep up with all these charts, but okay. Here's a really good example of our Elliott wave theory and how practicing it and your entries off of it are going to be the way, to make the most money out of these plays. Okay, we have an impulsive move in the market here. All right, don't chase it. We have a lot of volume going in, but still, don't chase it. We had this nice accumulation. Nobody wanted this thing. When it came on Poloniex, people thought it was going to pump like Pascal, and it just kind of bled down, and then it broke. Okay, but don't chase the break. Don't chase the break at all. Get the retracement of the break. Okay, get the retracement of the break. Right there, 50%. Beautiful retracement. Okay, now this would be our number 2 point. So that's how you would identify that and say, okay, don't chase the pump. Don't chase the initial impulsive move, because it's going to retrace. And most of the time, it traces 50 to 61%. I mean, you can have a 61% retracement and still be bullish. So that means if you bought here, you're looking at 40% negative at this point. All right, so this is other people's loss right there. So here, we're looking, this one, don't chase it. Get the 2. Okay, get the 2, look for that 2. Look for that third wave to be at least the length of the first wave, if not a little bit longer. Okay, this one looks like it's about almost equal length. Then that fourth move, expect it to challenge the wave 1 height. Right there. Bang. Okay. And then that fifth move that comes out of it, you know, this could very well, if this stabilizes right here, let's just get rid of some things here. Okay. These are the moves that this thing's going to make. Okay, our stochastic looks like it has the room to do it. Now look, after our first wave, this thing was, you know, down, 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 down. But as soon as we broke this red line, it started to create its uptrend again, obviously. Here, also, we're getting to this point here where we very well might have now just broken free of this resistive line. We're holding this trend pretty nicely. This thing looks like it's gearing up for a fifth wave. So this point right here, where I have this buy zone, that this would have been the place to get in. I was looking at this yesterday on hourly and saying that, come on. Sorry guys, please forgive the lag here. Okay. I was looking at this yesterday and saying how right here, a lot of people are going to think this thing is continuing, but you can see it stopped. So once this thing stopped, okay, once we made a high and we have a lower high here, now we have 2 points of reference. Okay, we can basically draw a line from that high to that other high and right straight down. And that's like a level of resistance right there. Okay, until we clear that level of resistance, we're really not going to continue up. So as we hit here and people are thinking this thing's going to go on, we're understanding Elliott wave theory and that things are going to retrace. So I'm looking for a nice little ABC type of retracement out of this. Bang. Right down here to the top of this wave. Okay, right there. That's the buy point. You know, you could maybe try to buy here on this first sell-off. Maybe add to your position here if you really are confident, you know, want to trade it like it's going up and you're kind of scaling in. You know, you want to buy the dips. Okay, you don't want to buy it as it's breaking out. But now, this is where the retail traders are going to come in. Okay, it looks like we're getting like our hourly little bit of a cross. We seem to be on the other side of this line a little bit now. If this thing works its way up here and gets above this cloud here, this very well could initiate and should initiate another fifth leg out of it. But we don't want to chase it here. Okay, when we see it coming here, we don't want to chase this. No, we want to let the market do what it's going to do and wait for that 50% to 61% retracement of it. As soon as we get the breakout point and the retracement point, we already have 2 points of reference of a trend. Okay, trends are so important. You know, even if the price is going straight up in the sky, you can still usually put a trend on it. Okay. Right here. From here to here, we already had an established 2 points of a trend. So we draw that line into the future. And look, we're still respecting that right here. Kind of same thing with Ethereum. You know, we had 2 points and that third point drawn into the future. It's tagging that point. Okay. So a lot of people aren't aware of this. Okay. That, you know, even though this thing, you may look at it, you know, like this on your chart and say, okay, wow, this thing's going straight up to the sky, you know, like there's no real trend that this is. Come on. Sorry guys, excuse my chart there. You know, even when things are going straight up to the sky like this, you know, you can't forget, it's still going to have a trend. It's going to respect some sort of a relative trend. And if this line breaks, the game is over for this move, for this impulsive move. Okay. This one really seems to be the one lately that's really painting a beautiful Elliott, really beautiful Elliott on this one. And I wish I would have played it, but I just wasn't in tune to it. Not saying I might not play it if it breaks this cloud, but you know, I didn't put buys here. I just kind of did the analysis on it. Because honestly, guys, there's way more coins to play right now. I have to restrict myself from sending more Bitcoin to Poloniex at this point in time because I have a strict amount of money that I want to trade with, and I don't exceed that. And that's kind of like leading into the next little part of what we're going to talk about here is risk management, guys. Risk management and trade management. There is tons of opportunities in cryptocurrency right now, and I'm, like I just said, I'm restricting myself from sending more Bitcoin over to Poloniex because I have a certain amount of Bitcoin that I'm trading with. I try to get a certain amount of profits and results from that, and that's the formula. I want to stick to my formula. If I start sending another 5 Bitcoins over to Poloniex or another 10 Bitcoins and try to get into this coin, into that coin, then I start to have too many trades for me to manage, okay? So you don't want to overextend yourself and get into too many plays, okay? First of all, maybe choose like 3 or 4 coins that you can kind of monitor and kind of get to know the charts with, all right? And stick to a trading plan. You know, stick to a trading plan. Do never, ever go all in on a trade. Okay, that's an easy way to get wrecked. Like, I'm still wrong 20% of the time, and if that one time that I decide, hey, I'm going to go all in on this trade, trust me, the universe will make it so that that is one of those 20% of the time. It will happen. Okay, so as we start to get overconfident in our trades, we start to screw up. Okay, so you have to have humility. You have to be humble in this and realize that with great knowledge comes great responsibility. And stick to a trading plan and stick to a measurable amount of trades that you can manage. You know, you don't want to get into too many trades and, you know, not be able to keep your eye on them. Okay, which is kind of interesting for me. Like, that's why I feel like I've gotten a lot better at my trading when I got away from foreign exchange. Because when I was trading Forex, you know, I'm trying to find trades from like 16 different currency pairs. And I never really tuned into any of those charts like they were like my little baby, you know. But with Bitcoin and some of these altcoins now, we're studying these charts so much that we're kind of now understanding the complete cycle, where it's been, where it's heading, you know, the time frames and the strengths in those time frames. It's a little bit easier to manage than, you know, trying to find a trade out of, you know, 16 different currency pairs. So focus on just a couple markets that you really want to, you know, that you see potential in, and just trade those markets. If you see other things that are moving, you know, just accept it. You know, there's going to be tons of opportunities. Opportunities are going to come and go. They're going to come and go. But don't chase anything. You know, like if you see it at this number 2 point and you have some free Bitcoin laying around, and or your other trades maybe are just kind of stagnant and not working, there's nothing wrong with dumping out of one thing and going to another if you see that trade opportunity. But don't just keep feeding it in. Okay, like really set your limits and your parameters for the amount of money that you want to be trading with, and never, ever go all in on a trade. Okay, like, because as soon as you go on a trade, you start to really, you know, you're lacking discipline. And to trade these markets and to play this game, you have to have discipline. Like, you really do have. You can't be obnoxious in your trades, and you can't be without discipline. You really can't, because as soon as you start to get a little too cocky with it and start to be, you know, say, oh, okay, I'm going to throw all my money into this trade because this is a number 2 point or whatever. You know, that's the time that the market will come right back around and bite you. It really will. You have to really, you know, exercise that discipline. Okay, so risk management, key, guys. Like, don't trade with more than, I mean, with foreign exchange, I would only trade with 1% of my trading capital, just 1%, because just as much money as there is to be made, there is to be lost. I have to remember that too. Like, there's a lot of money to be made here in cryptocurrency, but if you don't trade it right, there is a lot of money to be lost, a lot. All right, so stick to a trading plan. With cryptocurrency, I trade with 5% of my trading capital, because most of these plays are not plays where we're going to risk losing that capital. Meaning that with foreign exchange, I'm trading on leverage. You know, I'm trading 1 lot, 2 lots, or whatever, reflecting of my MetaTrader account. So, you know, I'm exercising a larger amount of risk, so I only want to put 1% towards it. With cryptocurrency and these altcoins like this, you know, most of these are not traded on margin. So if we throw like, 5 Bitcoins into this somewhere and you start to have the trade be a little negative at a certain point in time, then maybe you're sitting with, 4.7 Bitcoins worth and you bought 5 Bitcoins worth, but you're not getting liquidated on that difference. You're basically just waiting for those altcoins to come back around into your analysis. Like for instance, for Stratis, like if we would have been trading Stratis on margin when we bought it at, 7,500, when it went to 7,000, we would have gotten liquidated. All right. Like, so, there's no, but with cryptocurrency, you're not getting liquidated on those moves. These are kind of like spot trade markets. So that's why I'm trading with a little bit more capital, because there's not as much risk. You're not getting if you're trading on margin, Ethereum or Dash or, Zcash or any of them that you can trade on margin, then sure, you still have that level of risk, but not as much because the leverage isn't as much. We're not talking like, 500 times leverage, 100 times leverage. On BitMEX, they do offer you that 100 times leverage, but you got to be so precise in your entries. You really do. So with cryptocurrency, I'll trade with like 5% of my trading capital. And that's it. Because you can make a lot of money by just taking 5% of your money and continually increasing it in value, by practicing these strategies, practicing these moves and saying, okay, let everybody else chase this thing. Let me get the retracement and wait for it to make its next move. This is a prime example right here. We can even say that it broke right from here on top of the cloud. This is a prime example of how we're waiting right here, positioning ourselves for an expected, come on. Sorry guys, this is like really laggy. Don't know what I pushed there. Come on.